Hi, that is Alvin from Dr. Wealth. And last week we saw Trust Bank launching its digital banking services, and it got a lot of people excited. So I want to do a video to talk about this and the upcoming competitors that are going to launch their products as well. So what makes this Trust Bank special is because it wasn't the original bidder for the digital banking license when the Monetary Authority of Singapore was offering the tender out. The winning bidders were from Grab Singtel Consortium as well as C Limited. So it was quite surprising that suddenly this trust bank came out of nowhere and even offered the services before the two winning bidders did. So this trust bank, the secret behind it was because Standard Chartered already has a full banking license in Singapore, and it could offer more than what the digital bank can give and provide to the consumers. So they could launch this. Right, then the other thing is that they didn't launch it by themselves, right? They decided to work with FairPrice Group, and the reason, in short, is distribution. Okay, let me explain a bit more. I'll take a few more slides to explain why is this partnership important and why Standard Chartered wouldn't want to do this alone. So the very first thing that we know is that the two competitors upcoming, one will be GXS, which is the bank name or the brand name that Grab Singtel are going to launch in very soon, right? It's actually offered to selected customers already, just that it's not been open to everybody yet. And the last one is Bank, which is by C Limited. And this Bank, we don't have much details. The launch is not even initiated yet, so we will have to have a wait and see approach and see what offers could they be bringing onto the table. So what makes this digital banking interesting is because the competitors already have very large distribution channels. For example, we look at Grab. It has 180 million users, of course not just in Singapore but within the region. And we also see Singtel, which is quite internationalized with subsidiaries in other countries as well, and it has 744 million mobile customers. And just mobile, right? We haven't even talked about home broadband or the TV, right? Services that people can subscribe to. So these are very massive customer base where they can be potential customers of the digital bank GXS. And the next one we look at will be C, right? C has three divisions. The first division is the gaming division, and the gaming itself has 77.2 million paying users. Likewise, it is just not in Singapore, but across the countries around the world, in fact. And then we also have Shopee, which is a very successful e-commerce platform in Southeast Asia. Unfortunately, C doesn't disclose the actual number of users, right? We can get some proxy via monthly visit or mobile downloads, but that's all, okay? So I'm not going to suggest any numbers here, but we can also have the indicative view on the C money, which is already launched, right? Because you think about it, right? Whether is it for games or whether is it online shopping, you will need to have monetary transactions, and that's where C leverage on that. Since you're transacting, why not open a bank account with Bank, and you'll be able to get better offers and discounts, right? So you realize that whether is it Grab, Singtel, or whether is it C, they already have functioning business segments that capture a large group of customers that they can eventually move them to the banking products. So we're talking about this distribution, right? So once a company owns their distribution channel, it's easier for them to peddle new products and services. Okay, so that is that strategy that I think the digital banks are counting on. All right, so why then StanChart want to partner with FairPrice? It's the same reason, because FairPrice is the largest supermarket chain in Singapore, and it has over 900,000 union members. And if we make a guesstimate, right? 20 years old to 64 years old may be the potential customers of this FairPrice supermarket, and we are looking at 2.6 million of them in Singapore within this age group. So these numbers, as you can see, is not as big as what we saw just now with Grab, Singtel, as well as C, right? We are looking at 70 million, 100 over million kind of user base that they have. So when we look at FairPrice, it's just like single digit, 2.6 million, that's all, okay? But we have to understand that this digital banking license is limited to the operations in Singapore. So even though, let's say, Grab has 100 over million users, and they can only offer these banking services to the people residing in Singapore. because the license just govern this jurisdiction. So they can't offer that same banking services to someone else living in another country because they will have their own governing laws and what they can do in terms of being a digital bank. So which means Grab and C would need to apply for more digital banking license in the region at least in order for them to tap on the real or their potential customer base, the full potential of their customer base, right? So that is still early stages. So we are only talking about Singapore, which means that this FairPrice Group would already give the StanChart partnership, right, a very good base to start with. Okay, so we are just talking about competing in Singapore based on this Singapore digital banking license. All right, so and I will also add that grocery buying, right, is a very critical part of our everyday lives. Okay, so it is much likelier that we need to buy grocery than hailing for a ride on Grab or ordering food on Grab or paying for games on Garena or paying or making transaction on Shopee. So I do think that grocery shopping has a higher frequency and you have a higher user base, and the utility definitely is a lot higher than what those Grab and the C got to offer online, right? So that is my view, all right? And if we agree with that and we take a look, if let's say each of these services are going to offer like a voucher, right? And we can see how much people will value it. So I did a poll on Facebook group and I asked, and about 100 people responded. And I asked, if you are going to receive $20 in voucher, would you receive it in FairPrice vouchers, Grab vouchers, or Shopee vouchers, right? So, and I get overwhelming votes for the FairPrice vouchers. And that shows that my point is largely correct, because the utility of FairPrice voucher and the criticality of using this grocery shopping is very, very high among everyday of the consumers, right? So it's a very critical thing that people have to do, and that's why they value these FairPrice vouchers a lot more compared to Shopee vouchers or even Grab vouchers, right? So with that, I do think that that's become a very, very sexy angle for this trust bank to acquire a lot of these customers via the FairPrice Group consumers. And they make it very attractive because they have this referral program that lasts until December this year. And the moment you refer another person, right, to open an account with Trust Bank, you get $10 and the person also get $10. So it gives a lot of incentives for people to get other people to join, right? So there's like a word of mouth, incentivized word of mouth that's going on. So I saw a lot of like this online discussion and sharing their referral to get their friends to join. And I do think that it has been very successful, right? This referral model and this $10, because of that utility in the FairPrice voucher, it gets a lot of people talking about it. So I do think that Trust Bank have a very successful launch, right, in this aspect. And of course, it depends on how far can it bring, and all the other user experiences, the products, the freebies, everything comes together in the future, right? But initially at this stage, I think they have gets a lot of things right, and they do have that momentum to get that initial customer base. So to top it up, they even have this Tesla as a grand prize. That's like not just one Tesla, but 3 Tesla you can win potentially. So it is quite, exciting, right? That you have this offer and it entices you with even better interest rate. So for example, Silly done a very good comparison, right? Putting Trust Bank and GXS Bank. But understand that GXS Bank is only in a trial or a soft launch state. Selected customers are offered to open an account. Not everyone can. Okay, while Trust Bank is open to everybody already. And the interesting thing is that you look at Trust Bank, it has a base interest rate of 1%. Okay, while GXS only has 0.08%. That's like heaven and earth. And they top it up, right? If you are a NTUC Link Card member, you even have additional 0.4%. That's 1.4%. It's a very generous kind of a savings deposit account, if you ask me, right? And of course, GXS top it up to 1.58% if you set certain things, what they call it, pockets. If you set like the saving goals and you deposit money into these saving goals, you will get this higher interest rate for those pockets, okay? But look at the promotions. I think because GXS is not open to everybody yet, there isn't any incentive for the referrals, where while this trust bank has already been going on, I've shown you that it has been very popular. So this is what the pockets look like. I just want to give you a bit of idea, right? So you can see this person example is like setting a Bali trip, a goal of saving $1,200, buying a new poodle, right, $238 and things like that. So you can set as many pockets of up to 8 of them, okay, and you deposit, then you get that interest for these savings in these pockets, okay. So it is like trying to incentivize you to save towards a particular goal, okay. So definitely in terms of interest rate, I would think that the trust bank again have a better advantage, right? The base rate is already 1%. It's rather high. And if you are an NTUC member, okay, you're a union member, which is more than 900,000 people are, okay, the chances are it's a no-brainer, right? And get a 1.4% interest. If you are not a member, you get 1.2% if you make 5 additional transactions within a month, okay. So there are other caveats. You still get the incentive, but of course it doesn't make sense, right? If you can get 1.4% and it's very easy to become an NTUC union member, I think most people would even be incentivized to get a membership in order to up that interest rate to 1.4%. And you also even get more savings, right? If you have that NTUC link card, credit card, right, you actually get 21% savings at the FairPrice supermarket, okay, provided you hit the minimum of a $350 spend, which is pretty easy when you come to grocery shopping, right, in a month, okay. So you get more savings, you get more interest, and it becomes like really very attractive for a lot of these depositors, a lot of all these consumers who are already buying groceries from the FairPrice supermarket, right? So why not park your spare cash there as well, okay? So I do think that all comes together to a very attractive package. And I think at the end of the day, the target customers may differ a bit, right? It feels to me that Trust Bank is targeting the everyman. Okay, so it's like the man on the street. It doesn't mean that whether you're an older generation or younger generation, everybody needs groceries, and you're just targeting the masses. Okay, while the GXS, in terms of the design, the UI, the feel, the saving goals, pockets, the all this interaction, it feels more targeted at the younger generation, the Gen Z, which also makes sense because a lot of the more matured folks have already been loyal to their own banks, right? The 3 local banks, for example, probably they already have built a relationship with them, a lot of products they've consumed them. It is very difficult for them to switch. Why not target the young ones who have not pledged any of this loyalty yet to any banks? And that's where I think GXS is targeting, right, the younger population. So it's interesting, even though they are fighting in the same digital banking space, the target audience looks a bit different. Okay, so I think that makes sense, right, as a strategy approach rather than everybody fight after the same customer base. And another interesting thing that came across my mind is that I also understand that there's this robo-advisor, which is called Money Owl. It's also part of NTUC Enterprise, okay? So as a bank, you can definitely offer more things than just saving accounts, okay, and just credit cards. Okay, so investment, robo-advisory is another part that it can be offered to the banking clients, and I do think that this Money Hour will fit very nicely into Trust Bank. So I won't be surprised that eventually an M&A happens and Money Hour comes under Trust Bank and offer the financial planning, the investment products to the consumers of Trust Bank as well. Okay, so I do think that this is possible. Okay, so let's just wait and see whether that happens. So in summary, I do think that Trust Bank has done very well in terms of packaging everything, and I think that the partnership is also a very excellent one. Standard Chartered already have the license, so this FairPrice Group doesn't need to bid for a digital banking license. It can leverage on what Standard Chartered license already offers. And on the other hand, FairPrice brought the customer base to Standard Chartered, right, through this partnership. And a lot of all this grocery buying are very critical, right, and then very high utility, giving vouchers, giving more discounts, giving high interest rate makes a lot of sense and almost really a no-brainer proposition for customers. And the second point is that this digital banking space is heating up and it's good for customers. It's good for consumers like you and me because we get more options and we're likely to get more freebies, more discounts to entice us to open these accounts, right? It might be, we might have multiple accounts and there's nothing wrong with it, right? Because even for the trust bank, it's up to 50,000, then you get a 1.4%. It's above that, you won't get that preferential rate. So that makes you think that, oh, if I have excess funds, I can just spread it around and earn as much interest as I can, right? Especially now in a high inflationary period, we definitely want to make our money work harder as much as possible. And then the third thing is that although it is good for the consumers, it may not be good for the shareholders because for Grab and C, they are already losing money by trying to grow market share in other business segments, right? For Grab would be their ride hailing, their food ordering, and for C would be their e-commerce, for their gaming. Gaming actually is profitable, right? But the e-commerce is sucking cash. So now with this new digital banking, they are likely going to spend more millions, if not billions of dollars to compete with one another. So shareholders might take a longer time to see profitability coming for these two companies. So there are consequences, there are potential, there are opportunities, and I think nonetheless, it is an exciting space to watch. And hopefully you like this video, my analysis of the competitive landscape. And I'm not going to show you any referral code, okay? I think there's enough referral code for Trust Bank, and this is just really for your information. I hope it has been educational and informative for you. Right? Remember to give me a thumbs up and subscribe to the channel so that I can do more of this analysis in the future. I hope to see you around. This is Alvin. Goodbye.